Hello and welcome to today's A-Team Group webinar on overcoming the barriers to implementing RegTech solutions, the view from either side of the fence. My name is Sarah Underwood. I work with A-Team Group and will moderate today's webinar. Our expert speakers today are Patrick Boscher, Strategic RegTech Advisor and Startup Angel at Pabora.io, Sophia Bantanidis, Head of Regulatory Strategy and Policy at City Innovation Lab, Matt Flenley, Marketing and Partnerships Manager at Datactics, and Kayvan Alikhani, CEO and co-founder of Compliance AI. If you'd like to ask the experts any questions during the webinar, please submit them and we'll do our best to answer as many as possible. I'm sure most of you are familiar with A-Team Group, but I'll tell you a little more about some of the events we are planning towards the end of the webinar. So let's get back to our speakers and let me ask them to introduce themselves. Patrick, please introduce yourself and tell us a little about your interest in implementing RegTech solutions and the challenges this can raise.
Thank you, Sarah, for the invitation, also for the possibility to talk about RegTech here in this A-Team Insight webinar. So my background is basically financial services. I've been with a large financial institution for quite a long time and was globally leading their RegTech strategy as well as the implementation. End of last year, I decided, okay, I want to transform the knowledge that I gathered and help and support startups and also other financial institutions to get together and make RegTech more efficient.
Excellent, thank you very much. Sophia, coming to you, please introduce yourself.
Thank you, and thank you for inviting me to take part in this webinar. I'm Sophia Bantanidis. I work for Citibank, as you can see up there on the slide, and as per your introduction, I'm in the Innovation Lab. And one of the things I look after is RegTech firms for our business, for the transaction banking business, RegTechs that can solve certain pain points that we have. On a more personal note, I'm particularly interested in RegTech because I have worked on both sides of the fence, meaning I have worked at large banks and asset managers in the compliance space. So I have seen the pain points and the inefficiencies. And also, I've worked at a regulator, at two regulators actually, in the UK and in France as well. And these regulators are also implementing technology solutions now in the supervisory tech space. So I have seen both sides of the fence.
Excellent, thank you very much. Matt, over to you.
Thanks, Sarah. Thanks for having me on. I'm looking forward to this webinar. As it says there, I head up marketing at Datactics, having joined there in 2017, following 10 years in retail banking. Similar kind of both side of the fence sort of story, looking after things in my banking life around customer experience and regulated data around complaint handling and conduct risk reporting. So I've seen all of the problems that I used to run into from time to time, and the difficulty with which it could be to get somebody to approve a budget. So now that I'm in a software vendor, I'm on the other side of that, house, and responsible for all things brand and marketing partner management here with Datactics, especially through, as it says, engagement with national bodies and supranational bodies, and with firms like A-Team who always put on a good show. So thanks, Sarah.
Thanks, Matt. Good to hear. Kayvan, coming to you. Please introduce yourself and tell us a little about your interest here.
Absolutely. Thank you so much for having us this morning and today. Compliance.ai very much focused on assisting banks, financial services, and insurance companies get a better handle in monitoring, tracking, and reacting to regulatory changes. And I look forward to talking more about some of the journeys that we've seen within that sector in terms of adopting and taking advantage of regulatory technologies to do just that. Thank you.
Thank you very much indeed. Before we start our discussion, I'll just run through very briefly what we'll be talking about today. We'll start with a look at specific functions where RegTech solutions are gaining traction, and a look at whether RegTech innovation is being driven by financial firms or RegTech startups, or probably somewhere in between. Moving on, we'll discuss the barriers to RegTech adoption and how they can be overcome, and touch on some of the mistakes made by RegTech firms when engaging with financial firms. Moving on again, we'll consider how buyers evaluate the market and reduce the risk of new solutions. Back to the RegTechs, and we'll offer some best practice guidelines for working with financial firms. Towards the end of the webinar, we'll review how firms can quantify the value derived from RegTech solutions, and that's not an easy one. And finally, we'll look at the types of collaboration and partnership models that are working well in the RegTech space. So enough of me, and let's hear from the experts. So coming to you first, Matt, can you tell us a little bit about which functional areas of financial institutions you see RegTech solutions gaining traction?
Certainly, Sarah, thanks. So at Datactics, the biggest traction we see is connecting business expertise with reliable, high-quality data to demonstrate regulatory compliance, because regulatory compliance doesn't or shouldn't sit in its own silo away from the business. It all relies on the same data that's needed to run the rest of the firm. We're pretty pragmatic when it comes to RegTech. We see our part as one piece of a much bigger picture. So we know that people in compliance teams are not usually programming experts. We believe the greatest innovation comes where these subject matter experts can interact with and derive insights from the data themselves through sort of so-called low-code or no-code interfaces without having to perpetually go through IT. We know that for other firms in the market, it's things like machine readable and executable regulation or discovering PII from unstructured data for GDPR. But for us, it's in that self-service data quality for regulatory compliance and in the building of a dynamic single customer view. These address the regulator-driven data quality demands across retail and investment banking, such as deposit guarantee schemes like the UK's Financial Services Compensation Scheme, to risk reporting like BCBS 239, or even anti-money laundering regulations like AMLD5.
Thanks, Matt. Patrick, what would you say here in terms of where you're seeing traction?
Matt, I like what you just said, because the key of all the essential compliance controls is nowadays data, and that's certainly one of the key areas where most first of all financial institutions should invest in or are starting to invest in, and also RegTechs should focus on, because it's the underlying asset that you have to basically conduct your controls. I mean, in terms of compliance programs, I mean, still the old-fashioned, let's say, financial crime parts, as you mentioned before, AML and also sanctions, they will still remain, just because of the huge amount of penalties you will get if you don't comply with such regulations. On the other hand, what we saw in the last couple of years, or what we observed, was the upcoming of data privacy. Everyone knows about it, but also the regulatory reporting, which is one of the new key components in many jurisdictions worldwide. So if I take Matt's words, I think it's very great what you said about the data. Once you have the data, you're able to basically run all of those checks and controls. In particular, to take it one level further, what many are doing right now is looking into identifying key risk indicators, identifying risks before they actually occur, and also to identify, okay, whether or not processes and controls are actually effective and efficient, which is something that a lot of RegTechs are looking now into as well. But just reiterating, I think everything starts and ends with the data that you have available, and then you can focus on the compliance programs. So I really like what you just said.
Okay, lovely. And staying with you, Patrick, which organization type is driving innovation? Are financial institutions or startups, or perhaps the answer is somewhere in between there?
That's a very great question, to be honest. I think if we talk about the innovation, I mean, innovation is always linked to investment as well, right? There can be very innovative persons and staff members who have great ideas and who want to do the right thing and want to do the best for their company. But on the other hand, they need to have the respective funding, and this is where where the funding comes from. And most of the funding in the regulatory space, of course, you have when it's regulatory or risk driven. It's still very unfortunate, to be honest. I mean, me having been like in this area, sometimes you need to have like regulatory risks and fines and this kind of stuff to get your funding. But still, most also what I see with other financial institutions, really the funding gets out where there's a lot of risk and that you may have in the press and media, or you get even fines from regulators. Of course, there is also a lot of force from management and from business side to digitally transform the compliance function. But you can easily say that without money, you're not able to basically change this. One big game changer I've seen and observed the last couple of months, of course, was COVID-19 and the crisis, where things suddenly changed. So priorities got readjusted. Let me phrase it that way. That projects got moved to next year or the next couple of years, and the immediate keeping the situation in a very safe and secure position was more important than innovation. Just a conversation I've had or I've recognized throughout the last couple of months.
Yeah, that's an interesting point. Sophia, what do you see here? Where is the driver behind innovation? And would you agree with Patrick that people are playing safe at the moment?
Yeah, so from my perspective, from what I've perceived, it's coming from both ends. It's demand-led and it's change-driven as well. So some of the innovation is certainly being demanded by institutions, by big banks like ourselves, like Citi. And this is usually on the back of a client pain point or on the back of internal inefficiencies, or maybe it could be an area where we want to shape the future of the industry. And I'll give you a practical example to highlight this. One of the areas we wanted to shape is the future of how we will be delivering services to our clients, the future of client services, if you like. And on the back of this, we did a very big event last year to mark the 10-year anniversary of our innovation lab, where we took this future of client services, we split it up into different problem statements and pain points, and we put out a pitch to progress event for the startup community, for the RegTech firms and fintech firms to help us deliver the future of client services. So this is an example where we had startups pitch to us on the back of our demand to help us shape the future of client services. So that's one example. Equally, I believe this innovation is also driven by the various disruptive startups and RegTech firms we've seen out there. Why? Because a lot of the founders, they have often worked at big banks and they have seen the problems, they've seen the inefficiencies, they understand what the problems are that we were facing and that need fixing. And then they leave the bank and they create their own product, they create their own startup to help us in banks solve these problems. So it's coming from both sides.
Okay, thank you very much indeed, both of you. And moving on, before we speak and talk about the barriers to RegTech adoption and how they can be overcome, let's take an audience poll. The question is, what are the main barriers to adoption of innovative RegTech in your organization? You may press as many of the buttons as you like, and you have 20 seconds to do so. That's great, thank you. 60% of our respondents say it's difficult to introduce to stakeholders and decision makers. Behind that, on all the other questions, 28% response, hard to get on preferred supplier lists, lack of balance sheet precludes serious consideration, and there are just too many RegTechs to deal with. All good answers. The one sticking out, that it's difficult to introduce to stakeholders and decision makers. Coming to you again on this one, Sophia, perhaps you'd like to comment on the poll results and then talk a little bit about the main barriers to RegTech adoption and how they can be overcome.
Yeah, thank you for that. Very interesting to see the results. I agree with all of them. I also agree with the split. It's not a surprise to me. But as I think about the barriers, and I have presented on this to the European Commission and the supervisors of all the EU member states, I would split the barriers into 6 buckets from what I've observed. I'll run through them very quickly. Number one, it's the breadth of proposition and geographical coverage. And we're not seeing enough of that in some of the solutions that are out there. What do I mean? We're still seeing an awful lot of single point solutions that tackle one specific problem or area with regulation. But for a big bank like ourselves, it's not feasible for us to implement lots of little single point solutions. If you take the GRC space as a practical example, so governance, risk, and compliance, what would make more sense for us is to have a solution that covers or captures data points globally. So we can have a global, all-encompassing inventory of regulatory changes together with policy management, together with compliance testing, that also shows us and gives us insights from all the different engagements that we have with regulators globally. And having all of this in one product, that's difficult for some firms to pull together. Also, because we operate in so many different countries, anything that we adopt has to work in all those markets and cover all the different languages, not just 5 languages. So that's number one. Number two, it is very likely that when a RegTech provider is selling, particularly to a big tier 1 bank, that the tier 1 bank will want their solution to be tailored to its needs, to its business products, entities, jurisdictions, and client base. This is a challenge for some of the smaller RegTech firms to adapt and to tailor the requirement to our needs. Some of them, they just don't have the cash or the resources to tailor the product to us. That's number two. Number three, product delivery and track record. That is also a barrier, and this is almost like the impossible Rubik's Cube, right? We would want to see some form of track record of delivery of the RegTech products, and we would be asking for references. But of course, this is impossible for some of the newer RegTech firms that are coming into the market that have no track record. Everybody has to start somewhere, if you like. Number four, tech integration in a corporate environment. I'm surprised that actually didn't come up, I think, in the poll results. That definitely is a barrier. I think people have to understand that when we, our initial engagement with the RegTech firm is often seeing a demo on a laptop, but that is very, very different to having it installed in-house in our infrastructure. The two are very different things. We are still finding, when we look under the hood and really test out the technology, that a lot of applications are filled with bugs. So that's a problem when it comes to integrating, and that acts as a barrier. A lot of RegTech solutions are still hosted on AWS or a SaaS base. That's fine. It's just much harder for an institution like ourselves to adopt because of our rigorous cloud risk assessment process and information security processes, which not all vendors, not all RegTech vendors pass. So again, another barrier. Number five, the timelines, the vendor timelines. Sometimes we struggle to meet the timelines of RegTech firms. We understand that they're under a lot of pressure at times from investors, or they have to show they're getting traction with clients or prospects, or maybe they're under a timeline pressure because there's a deadline for applying to a particular regulatory sandbox, and we just can't move that fast for them. Another barrier. And my final barrier is the regulatory comfort. And, I run a group internally at Citi, a group of innovation ambassadors. So these are colleagues in compliance, risk, legal, AML, etc. And when we talk about RegTech, the one barrier they highlight is, look, whatever we adopt, we're going to need some form of assurance that a regulator is going to be comfortable with the solution that we use. Or is a regulator going to challenge us for adopting a particular solution? Or what if we adopt a particular RegTech solution, and as a result, we discover problems in a particular area? Will a regulator then come and say, "Ooh, could you apply this retrospectively?" So you can see why all of these things combined create barriers.
Thank you very much indeed. Keivan, what would you like to add there in your experience? What have you seen as the barriers to RegTech adoption?
Yeah, absolutely. Talking to chief compliance officers or conversations with risk officers and general counsel, specifically within that mid-market, we're seeing a pain of change, from the status quo. And that's always inertia, there's always friction going from a manual, homegrown, and typically highly consultative approach to one that is more automated and requires less of those users, and that typically is painful. Secondly, Sophia was talking about that first year set of organizations, and that's very much valid, but we all know that there are thousands upon thousands, tens of thousands of that mid-market organization that cannot afford or is not looking for yet another monolithic solution that takes 2 years to implement and requires huge amount of investment. So really providing different products for different sectors, moving away, in fact, from that one size fits all, moving away from that monolithic approach to one that is purpose-built business solution, something that you see companies like Salesforce.com have made possible, SaaS-based, non-software, nothing to install. And that in and by itself is a change philosophically that has to be adopted, at the board level and at the C level. That's a pain. And lastly, I think it's trust. You think of RegTech, the term itself, how old is it? How familiar are those decision makers? And that's really going to take time to show its impact. And for that, organizations need to run in parallel, right? New solutions that are RegTech driven with their current status quo approach, yield the get the savings, see the return on investment, and then gradually adopt them. That's very much time consuming. Part of it really has to do with education, and that education would be within the office of the compliance officer, risk officer, general counsel, and then of course assessments that could be time consuming. So those are some of the barriers.
Okay, thank you very much indeed. And coming back to you, Sophia, please describe some of the common mistakes that you have seen being made by RegTech firms when they're engaging with financial institutions. Apologies, everybody, you can see the bar from my computer on the bottom. I'll try and lose it, but it's not going well. Okay, over to you.
Yeah, thank you for that. Yes, I am seeing some common mistakes. Number one, it's the misrepresentation of a firm's existing client base or their existing partnerships. This is quite unfortunate, but we have observed this quite a bit over the last 2 years. So where a particular vendor tells us, yes, I have already sold my solution to bank X or bank Y, or I have a partnership with this bank, or maybe they have sold the solution to one of our clients. This is often what we hear, I would say, very early on in the conversations with RegTech firms in the earlier phases. But as we progress with our conversations, if the product is of interest to us, we will, of course, be doing our due diligence and checking. And often we find that there's, sometimes I should say, we find that there's nothing there. Maybe it was just a POC they did with a particular bank, but it wasn't a paying client. Or actually we find that if they've sold to our existing client, actually they didn't even get to a sale. So this kind of misrepresentation is an unfortunate common mistake. And then the other one I would highlight is around, does the product actually do what it says on the tin? So if a RegTech firm tells us they can help us, in this particular area, and again, when it comes to further on in the conversation or the relationship, when we really put the product to the test and look under the hood, we can tend to find that it is only a half-baked product that only does a percentage of things that we were promised upfront. So those are the common mistakes I'm saying.
Okay, great. Patrick, what have you seen in terms of mistakes?
Well, I think that's already a very good list. I mean, so in this case, also been on both side of the fence, right? Back then, I'm alive at Allianz Group when I was in charge of regulatory technology, where I was talking to startups and RegTechs for at least 2, 3, 4, 5 per week, as much as I was able to to do, and on the other side, helping the startups to do the things better. One of the key conversations that I came across was that, and the key thing is communication. It is basically 2 different languages, and I'm actually working on a paper together with others on exactly this exact issue. But to basically narrow it down in a nutshell, when I was in my old capacity, we often had pitches where some startups or some RegTechs would come to us and say, "Hey, Patrick, look, we're amazing, we're great, and this and this and this, and this is the list of your key problems, and we have a solution to everything." And then in my head, the first question was, do you even know what my main and key problems are. And of course, that is not because we're focusing on isolated problems, as Sarah also just outlined. It's Sophia, sorry, what Sophia just outlined. It's like, you're looking at one narrow problem, but it's a broader thing, right? So this one was like something that you recognize until after 5 minutes. Okay, guys, it probably wouldn't work if we continue this discussion. The other part, which is more important, is communication, because startups and RegTechs, and I call myself to be a nerd as well, right? I just grew up as a nerd in compliance, like an IT nerd in compliance. We're talking different languages, so don't assume that you're talking the same languages. Compliance and IT, they're talking different languages, and it will take years for them to understand what the other one is actually trying to express, to say. And this is one of the key issues that I have observed over the last couple of years, and where I was working heavily on making sure that do talk the same language. This is one of the key issues, because sometimes they have the same ideas, they want to do the same, they want to do everything to their best knowledge, but on the other hand, they really are not able to communicate with each other. Lastly, and that's and it goes back to a question that we have had earlier, right? Is about data and the understanding of the asset of data. As a RegTech, you would go to a company like, let's take a large financial institution, a large bank, large insurer, whatever it is, right? And you assume data is just there and you can play with it. That's not reality. So the point is that RegTechs have to understand limitations of corporates, that it's just sometimes from a data perspective, it's a nightmare. Data is, distributed all over the world. It's not in, central databases. I always tell them, assume the worst case scenario, and in 90% or over 90% of the cases, it's proven to be true. So on the other hand, you have the corporate world who will say, like, oh, that's an ideal world. Of course, your solution could help us, but we don't know how to do it. So eventually, they need to talk the same language to bring everything together and say, look, that's a feasible solution. That's something we can actually execute on, and that's one of the biggest lessons learned I've been through the last couple of years.
Excellent. Thank you very much indeed. Talk about barriers and mistakes. There's an awful lot going on here. So coming to you, Matt, how can firms assess new RegTech capabilities? And after all the problems and mistakes we've just shared, how can they ensure they fit with their operating model, or is the operating model changing to fit the new capabilities? As you answer the question, please would you explain how Datactics self-service data quality fits in?
Absolutely, no problem. Yeah, well, for us, there are probably two best ways of a potential client assessing our abilities. And they're either in a short-term paid proof of value or an even shorter competitive proof of concept. This can be sometimes as part of scoping for an RFP, where the client knows they have a problem to solve, but is unsure as to which specialist vendor to select. We love the chance to effectively bake off against other vendors over a week or two across some set scenarios in a highly intense assessment of what the client needs and what we can do. It's very much in line with the whole startup scale-up mindset. It's high energy, high intensity, fast results. Sophia said how important it was to do what it says on the tin, and she's absolutely right. I think a big part of that startup scale-up mentality is to fail fast, which is normally anathema to people in banking, and that can be one of the cultural complexities that we encounter. But ultimately, you're able to kind of demonstrate very, very quickly that you can do the job. I mean, you put yourself forward for it because you back yourself. For firms a bit further down the line to business implementation, the best route to success, bar none, is the proof of value. We did this when working with Danske Bank in the UK on a financial services compensation scheme, for example. You get a business-ready solution in place in 6 weeks, and then win the business on the back of it. On the paid side, RegTechs like us, if a client is paying, then firstly that shows that they're serious. Things that people pay for always mean more than things that come for free. And remembering from my time in banking, if you've ever had to try and get a budget inside a bank, you definitely want something back for all that effort. RegTechs at any stage will also need the market experience to adapt and customize what they're doing. And Sophia mentioned this earlier on. On top of that, we can use these proofs of value to rapidly innovate and prototype and to develop enhancements that'll make an even bigger difference to the client. Clients mean so much to firms that are growing and starting out on their journey. So this goodwill that you'll build by working with one will definitely reap results. As you say, you also mentioned about the operating models that we're seeing. So most of the people that we're talking to are in a situation where their operating model has one way in and one way out of IT, and that includes the data needed to demonstrate regulatory compliance. IT can end up under the weight of thousands of tickets logged to provide ready-to-use data from right across the business. These often conflict, and as I said earlier on, they can be said in different ways and interpreted in different ways. In one case that we know, a 6-week time frame exists to access and produce data for a monthly report. So clearly something's got to change in that. So we've seen a significant move to a much more collaborative operating model, much more agile, sprint-based implementations with data ownership and stewardship in place, because there's a recognition that regulatory compliance doesn't sit in its own silo apart from the business. It's integral to doing things right. So I can talk you a bit through the platform and how that fits into this model, where each area has tailored tooling to enable effective collaboration. So if I start at the bottom right, chief risk officers, heads of business lines need to be able to see a big picture view. So off-the-shelf dashboards from the likes of Click or Power BI, they provide them with insights into the health of their data as it pertains to regulations. For example, showing them exceptions to their PRA reporting for deposit guarantee scheme, detailing what's wrong and which business area needs to fix it. That provides trends analysis to understand if the overall health of the data is deteriorating or hopefully getting better. Then to the top right, because I'm left-handed, I'm going anti-clockwise. Business line data stewards want to interact with the data. They want to fix what's wrong and create an audit trail of data corrections for root cause analysis that can be picked up in those dashboards. Bottom left now, the data management office is where the business lines and heads of business have their rules rapidly created in a drag and drop interface that ships with highly customizable pre-configured rule logic. So that can be on rules relating to data completeness or accuracy, right through to regulation specific rules built from regulatory handbooks on dates of birth, locations of account being held, and so on and so forth. And then finally, on top left, that the data management office combines all of these rules and then connects through to IT just in that one point across a wide range of connectors and data types for both internal and external data sources. And this highly collaborative approach minimizes the impact on IT, it maintains data integrity, and effectively democratizes access to data throughout the business for a wide range of purposes, and in this case, to be able to comply with regulations.
That's great. Thanks, Matt. Let me come back to you, Kayvan, and could you add anything here in terms of where things are fitting together and how that works?
Assessing capabilities, what we found time after time working with compliance officers is very much it's like changing the wheels of an automobile that's driving at high speed. Something is already in place. As you've already said, there's an existing operating model and there is no ambiguity, frankly, about the existing workflows and the existing operating model that organizations have. We believe you're not really there to necessarily change the model. You're trying to make it significantly more effective and efficient, reduce the burden by reducing the noise, reducing the chatter, and making everything do more with less. So frankly, from an assessment perspective, what we've seen organizations do, and I think it's very smart and the right approach, is a side-by-side assessment. Don't abandon the current status quo, the current operational mode, but run this portion, whether it's around information collection, normalization, filtering, tracking, assessments, research, reporting, workflow, portion by portion, side by side, alongside your current mechanism to see if it does what it's supposed to do, if it covers the type of information that you're looking for, and then make a decision subsequent to that. And secondly, really looking for coverage. Does it have the type of regulatory content and the type of documents that are important, for the organization? Does it have the coverage in terms of topics? Does it provide accurate extraction and results? And that side by side can be also helpful in the implementation of workflows. Can it support the workflow that I have within my organization. So we think that type of a gradual step-by-step type of assessment of capabilities to see if it matches existing operational mode is helpful. With time, organizations may adopt those operational models and adjust them, but I think for the time being, RegTech capabilities would be more of a cap and replace. Essentially, be there for a period of time, show the return on investment and the reduction of cost of overall cost of operational cost of compliance, and then subsequent to that, organizations have a much higher peace of mind, if you will, to make a decision in terms of replacing current methods with RegTech capabilities.
Okay, thank you very much indeed. That gives us a lot of information in that area. And before we address the issue of how prospective buyers evaluate the RegTech market, let's take a second audience poll. The question this time, how are RegTech innovators regarded by your organization? And please choose one answer this time. 20 seconds to do it, and off we go. So how are RegTech innovators regarded by your organization? Some 32% say they're not recognized or characterized in this way. 26% a new supplier who to be considered by the appropriate line of business. Both on 21%. Special case supplier requiring attention over the incubator or innovation team, or a small risky supplier that won't proceed past initial due diligence. That's quite a lot of different answers. Keivan, come to you. Do those answers ring true with you? And how do you see prospective buyers evaluating the marketplace and handling due diligence to minimize risk?
Absolutely, absolutely. What we are hearing and we're seeing in RFP after RFP is the request for comprehensive coverage. Using that as a means of evaluation, agility from the point that change is published by the regulatory agency to the point that I have access to content that helps me make the right decisions and decisions that can be made swiftly. Is that really helping me, saving me time? Accuracy. Am I losing anything? Am I missing anything by using the solution? And what is the level of accuracy in terms of the content and in terms of the assessments? The other one that we're seeing is very much referencing, peer validation. Who else is using this solution and what has been their experience with it? And we've seen that makes very much sense from a peer validation. But subsequent, one thing that is quite important is regulatory validation. Are the practices that are being advocated by regulatory solutions in line with the regulators' guidelines for use of automation, for use of, for example, artificial intelligence? And in the US here, we're seeing more and more regulators that are looking at providing those types of guidelines, looking for any and all opportunities to automate and simplify is actually advocated and recommended by regulators with an asterisk of requiring auditability, transparency, and you can't, for example, point to automation and say the machine did it. You still have to be very much accountable for the results of a RegTech solution. We actually authored a white paper outlining the product fit requirements for RegTech. Basically having that chief compliance officer, risk officer, or general counsel demand specific characteristics from the RegTech vendor that would most fit an organization: auditability, scalability, security, simplicity. But last but not least, really we believe that compliance is a team sport. Requiring and demanding openness and the ability for solutions to work with the existing investments that these organizations have made in compliance solutions.
Okay, thank you, Keivan. Matt, what would you add here?
So yeah, I mentioned previously about proof of concept and proof of value, and these both work well to mitigate risk because they're tightly controlled, can demonstrate technological capability that'll reduce risk rather than just being a risk to do business with. But Keivan is absolutely right as well. Ideally, we would all be coming down with client testimonials and insights into how they use our software. But as we all know, these can be extremely tough to get through all the layers of approval needed on the bank side. And well, from our point of view, if there's one set of approvals that we definitely want our buyer to get, it's the one for budget. One client, as it happens, if I think back, they actually asked us to provide than with a reference from another client off the record to a prospective client. So that way of sort of joining the dots up between sort of heads of data or chief data officers, as it was at the time, was extremely helpful, and was one really handy way around that sticky problem. Connecting with innovation-specific people at banks and other financial institutions is a complete must, as is being realistic about the differences between RegTechs, whose balance sheets aren't always that great and have little to no credit rating, and those larger blue-chip institutional software firms. I know from dealing with bank onboarding teams that the sort of software onboarding vendor checklist you have to fill out is usually hundreds of pages, and that can provide quite a complex block if you're going to actually try and get in through the door in the first instance. So I think being able to work in those sort of controlled environments and demonstrate your capability in those is vital. For us as well, working with regulators is nothing but a bonus. I think we're really lucky to have a technologically savvy regulator in the UK, with a sandbox and series of tech sprints that often break new ground in bank and vendor collaboration within a controlled environment. And actually, I've just remembered just before coming on here that our head of AI, Fiona Brown, is going to be part of a public-private forum on AI with the regulators in the UK. So that kind of engagement that the regulator is pioneering to get firms and banks and regulators together is probably one of the greatest ways of being able to present ourselves as being risk savvy and good to do business with. And I would just encourage every other RegTech out there to be looking for opportunities to sort of build credibility that way.
Excellent, thank you. Sticking on the same kind of subject and coming to you, Patrick, on the RegTech side, what best practice guidelines would you suggest for RegTechs that help them better engage with financial institutions?
That's a very great question. I mean, it refers to the fact that it was mentioned before that communication is one of the big and most challenging things. Whenever I advise RegTechs and also other startups, let's say, who are addressing financial institutions, I keep telling them to have an open-minded opinion, when going into it, and ask questions. Asking questions is never stupid. Asking questions, getting insights, getting the knowledge from the guys from a corporate side. They might not necessarily love it, to be honest, in the first place, but as a RegTech or as a startup, you need to get such information. So asking questions is the key to get really to understand what their thoughts are, how they're thinking, what their priorities are, and also to understand their language, how they're talking. On the other hand, RegTechs make it sometimes very quite difficult to access their tools, because they want to have, of course, first run a POC and a bunch of workshops and everything else, and they want to get paid for it, which is something that is understandable, of course, because as we heard before, their P&L is different than P&L of a large corporate financial institution. However, I keep telling them, just make it freely available to them, for free for like 3-4 weeks. Let them try and play. If your software is available, as a software as a service platform, for instance, just give it to them, let them see and let them understand the advantages. You have to understand, as a RegTech, you're talking, in many cases, to someone who doesn't necessarily understand IT or technology or anything in a broader scope, right? Because their background might be, just the legal space. So giving them something they can play with, it's like giving someone an iPhone to say, like, play around with this device for like 2 weeks and tell me whether you love it or you hate it, and you will see the big differences. So this is like a huge thing, because it's a different approach. On the other hand, what I also see is that RegTechs, and I can see more and more getting the knowledge in. It's important that RegTechs really understand what corporates are doing. How is a financial institution working? How is their corporate structure globally? If I would ask, I don't know, anyone in a large financial institution, how's your financial structure? How's your global structure, it will take this person like 10, 15, 20 minutes to explain to me how this structure globally, looks like. Just one example. And it is key and essential that RegTechs get the knowledge and insights from people coming from such institutions. And in many cases, it's already happening. It's been happening in the past, of course, but I still see a lot of RegTechs who claim to say, look, we have, knowledge from people coming from this XYZ bank or this financial institution or this advisor. And after 5 minutes, I really see they have no idea because it's too far away, it's too abstract. So having the knowledge of how a large financial institution works is really, really key. Just not only the risks in terms of we talk on compliance and what they need to implement, right? The risks, but also, like all the processes that you need to consider and this kind of stuff. And lastly, I want to mention if you get a chance to demo stuff to a financial institution, don't put in like too many slides. I've received I don't know, pitches of 30 slides. It was like 30 minutes, and the last 5 minutes I saw the solution. Keep it down. Tell the other part what is your USP. There are solutions for everything out there, or almost everything, right? But keep it down. What is your USP? What is your unique selling point? Tell them and show them, and do this like in 15 minutes and not in 30 minutes. And I think then you have an amazing pitch. But I think also, I don't know, Sophia, maybe also good, to step in here and share.
Yeah, let's do that. Sophia, what would you say your best practice guidelines would be?
Yeah, this is an excellent question, and thank you for giving me the opportunity to answer this, because at Citi we are very passionate about opening up our books and being transparent ourselves in terms of our engagement model with fintech firms, so that fintech and RegTechs, RegTech being a subset of fintech, they are armed with everything they need, so they are best prepared for their first meeting with us. In fact, we're so passionate about this that over this year, 2 weeks ago, and also last year, we did a dedicated session under the auspices of Innovate Finance, the trade body, specifically for RegTech and fintech firms, where Citi experts, including myself and my colleagues from all around the bank, opened up our books and presented our playbook. So best practice guidelines, including our onboarding process, timelines for that, and everything really a startup needs so that they're best prepared to speak to us. And a few things I would point out, and really these are the other side of the coin to the common mistakes that I mentioned earlier. So number one, and I know this sounds very obvious, but you would be surprised how often we see this miss. Be transparent and honest in your dealings from the first meeting, from that initial meeting, even if that initial meeting happens at, Money 2020 when we're grabbing coffee together. Because like I said, what we often find, and the common mistake, is a startup telling us we sold, our solution to this bank, when in fact it was just a POC that ended up going nowhere. We will find out eventually. Number two, come prepared to offer client references. We will be asking for those at some point. Number three, because Citibank is such an enormous organization, and because dealing with RegTech or adopting RegTech, it's not just one person's job. We're not structured like that. We don't have a team packaged off somewhere that says, oh, this is the RegTech team. That doesn't exist. Therefore, it is natural that a RegTech firm will be speaking to a number of people across the city, globally, and a number of businesses. So tell us about any existing conversations and engagement and what the outcome was, because this will help the startup get traction internally, but also more importantly, it will help us make sure they are actually speaking to the right person for their problem. The next one is, be curious and ask us questions about our roles, about our structure, about our business, to determine if you're even speaking to the right department for your solution, and come with that curiosity in the meeting as opposed to just a hard sell for a product, a RegTech product, say on MiFID, for example, that has nothing to do with transaction banking, which is the business that I sit in. So those are just some pointers for me.
Excellent. Thank you very much. Thank you both. Moving on, let's look at how financial institutions can track or quantify the value derived from RegTech solutions. And whilst doing this, Kayvan, perhaps you would like to walk us through this slide.
Absolutely. The proof from a organization's perspective lies in time saved. What was I doing before? How much time was I spending managing, tracking, monitoring, and reacting to regulatory changes? And how much time am I spending right now? And on average, an automated solution would have to provide 20+% savings to warrant that transformation from the status quo to a new mechanism. And then the change of implementation, your cost of implementation and ongoing upkeep of the solution. Did it really save me money? Did it really reduce the operational costs related to compliance and regulatory change management, as an example? And that needs to be substantial to warrant switching from the current operational mechanism to something else. And on average, anything that would, I think, provide 30% plus savings in terms of the cost of both implementing and ongoing maintenance of the solution warrants that kind of a change. Ease of use, surveying your users, finding out if they're asking questions and puzzled by these types of solutions, or are they actually providing positive feedback in terms of being able to use services on a self-service basis and not necessarily require hand-holding every step of the way. And then finally, looking at reporting and seeing on a long pole, did this actually reduce the fines and enforcement actions and the threat of the organization being in the news, which has both financial and reputational consequences? I would say one characteristics that help these companies track is really looking at what we've learned, if anything, that we've learned over the past decade plus, is small is beautiful. Focused business solutions. Really look at the promise of RegTech, not asking for thousands of features across 15 business units and requiring a regulatory technology provider to solve all your problems from day one, and instead looking for focused business solutions that actually are solving very specific problems for a very specific group, but then demanding interoperability. This helps you as an organization really select that best of breed. And if they don't work, allows you to replace them without a huge impact on everything else you do. So instead of looking at every solution as an 18-wheeler backing into your organization and solving everything that you think has operationally broken or could be improved, look at that best of breed for very specific focused solutions, and that helps it helps you take advantage of the agility of these solutions as well. And finally, has it reduced your anxiety, right? I think a very good measurement is to see whether you had that peace of mind going into that next auditor meeting or into that next management meeting or in discussion with regulators, that you now have a much more robust, scalable solution, right? That gives you a lot more understanding, transparency, and explainability of everything that's happened before, during, and after the rulemaking process. So at the end of it, reducing the noise, allowing you to be in the know, taking advantage of the solution to reduce the cost and time it takes to make the right decisions, and finally making it significantly easier to report on everything that happened during that process. We think those are the characteristics that then lead to improved measurements for financial institutions, both in terms of tracking and also quantifying the value that they derive from the regulatory technology solution.
Thank you. That's very interesting and very helpful, I think. Coming to you, Matt, what tips would you give to help innovators in financial firms get the board, compliance, and other key stakeholders on board with innovative or disruptive kind of technology initiatives? How do you do that internally?
So I can answer this from sort of both sides. I know from working in banking that probably the first thing is agreeing on the problem, and that if it hasn't already gone away, then without changing something, you're going to keep having that same problem. you have to get into a mindset of fixing the problem, but that can be hard in a large financial institution because so many things around you are thought to be immovable or have always been done a particular way. I think if people see technology as another thing to have to do rather than a better way of solving the day-to-day problem, then you'll never get buy-in at that compliance level, the level that it ultimately counts, those business users who are going to ensure that the compliance of the firm through their day-to-day activities. Some of our clients' approaches have been to pick one thing that they can think can deliver a big hit. Sophia talked there about identifying a pain point, which could, for example, be automating some scripting rules on data sets across different sources that have to be run manually for a regulatory return, and then get the business lined up to buy a technology solution to that problem that will achieve specific business-driven results. For example, reducing the number of regulatory exceptions to within a permitted tolerance, or gaining a green rating from the regulator on an automated return, which was something that we did with Danske here in Belfast. But obviously it requires people to take some controlled risks. And as countercultural as I know that can sometimes be, risk should always be seen as something to manage, mitigate and control rather than fear.
Okay, Patrick, would you like to add to that how you persuade those on the inside to get moving with innovation?
Oh, very so much as that. I mean, the last couple of years, compliance finance or compliance departments finance themselves through fear, right? It was basically saying, if you don't get this amount of budget, we are expecting this amount of fines and those risks and whatever. I think those times have changed, and I think now it's a bit more about compliance to better understand what or how to get the budget. And well, I think that RegTechs have a great opportunity here to help counterparts in compliance or any regulatory department to help them on actually getting the budget through, properly creating, for instance, business cases, right? So assume you're, a compliance officer for many years. You have been doing your job. The thing that you haven't been doing for quite some while would have been to create a business case. So for RegTechs, I think there's a great opportunity here to really create blueprints, to create templates to help them take their hands and create really business cases and say, look, this is exactly why this solution is not only going to protect our company, but it's also to reduce costs and increase our efficiency. And I think there's a lot of opportunity out there. On the other hand, what you have to consider is that there's a lot of RegTechs out there. The market is very competitive nowadays, right? So it's about defining the USP. So the best thing you can do, from my perspective, to really getting the approval from board and the management and decision makers, is really get a lead in a large financial institutions and get this lead to basically sell your USP and an amazing business case, which is quite important, to be honest, and get all the relevant decision makers on board as well. Get the pre-approvals from operations, from IT security, whoever is necessary, right? Get everything on a very, very reliable and good level, and then ask for the money. And I think then it's the best chance to really get the funding that you're looking for, because otherwise you never know whether or not there's someone else pitching for a similar solution. I was just in another discussion today about data visualization, which can be anything from visualization through ETL processes, right? So it's very, very broad. So the processes and standards are quite high. That being said, you really need to define the USP. Why is this RegTech adding XYZ value that reduces the risk by whatever ABC, and at the same time reduces cost by XYZ, is going to be like the best solution possible. And that would be my best advice to this, because in most cases it's quite political. So I would rather go really on playing numbers, because numbers, I would say they don't lie, but numbers are very reliable.
Okay, I think we need to finish there. Thank you all very much indeed, and thank you for that. So USPs and numbers. We talked earlier a little bit about collaboration partnership models, but I'm sure our sponsors will be able to help you further if you need to know more on that. So time for me to say thank you very, very much indeed for all of you for taking part in today's webinar, and thank you to Datactics and Compliance AI for sponsoring the event. Just before we wrap up, a quick reminder about some forthcoming A-Team events that you can sign up for today. Our next virtual summit will be the RegTech Summit 2020. We'll host this next week from Tuesday to Thursday. The summit has a great lineup of speakers and panel sessions and is free to attend. You can register using the link, on your screen. Similarly, we have a few more webinars in the making. On the 7th of July, we'll discuss the transformation of buy-side market surveillance. And on the 15th of July, we'll address emerging risk and how to alleviate blind spots with AI risk management. Again, these are free to attend, these webinars, so you can register using the link on the screen. Finally, I'd like to thank Sophia, Patrick, Kayvan, and Matt once again for sharing their expertise with us today. And thank you to all of you who have listened to the webinar. Please complete our post-webinar survey and we'll let you know when a recording is available. Thanks again and goodbye.